Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Carnival and Royal Caribbean, which surged today in the market. Ticker symbol CCL. So Carnival, you can see up 12.59%, and then after hours up 0.61%. Currently priced at $16 per share. Past year up or down 68%. Past 5 years down 65%. So it dropped significantly due to all the recent circumstance. Market cap $11 billion. P ratio is 5.36 and dividend yield is 15.99. Scrolling down a bit, you can see analyst ratings are fairly low. 16% give it a buy, 68% give it a hold, and 16% give it a sell. Now looking at the earnings, you can see Q1 2020 relatively lower than Q4 as well as Q3. And because they're in the cruise line industry, across the board, travel and leisure has been impacted heavily because of recent circumstances that have put a lot of these travels on hold. And because of that, they have a decrease in revenue and a lot of the consumer confidence is not there. So no one wants to book travel or go on a cruise anytime soon. Now taking a look at Royal Caribbean, ticker symbol RCL. This surged 14.88% today. Past year, down 60%. Past 5 years, down 34%. Currently priced at $49 per share. Market cap is $10.38 billion. P ratio is 50 and dividend yield is 7.23. In terms of analyst ratings, 59% give it a buy, 35% give it a hold, and 6% give it a sell. In terms of earnings, actual earnings per share was a lot lower than expected, and it's been trending downward ever since Q3 of 2019. Now taking a look at the financials of both companies, Carnival Corporation, the key stats, you can see that trailing PE ratio is 5.98. Forward PE is higher than before at 11.0. Scrolling down a bit, 52-week change, you can see drops significantly, down 71%. Man, 52-week high versus the low, it's a drastic difference, night and day, within a 1 year. And you can see that in terms of the amount held by insiders is 15% versus institutions is 76%. Now taking a look at the dividend yield, you can see that dividend yield is 13.83%. Payout ratio is really high, 74%. I don't think this is even sustainable given where they're at right now in the current climate. Scrolling down a bit, profit margin is 8.94%. Operating margin in the trailing 12 months is 14.97%. Pretty low. Return on assets is 4.31%, and return on equity is 7.72%. Now for the quarterly revenue growth year over year, it's 2.5%, which is actually very low. They're just barely maintaining where they're at. They're not growing. Gross profit is 7.92 billion. Even EBITDA is 5.35 billion. Now for total cash is 1.35 billion. I don't think this was sustaining that long. Total debt is 14.43 billion. Total debt to equity is 59.42. So for every dollar of equity they have $59 in debt, which is really, really high. And that's just highly leveraged. I don't think it's sustainable. Operating cash flow is 5.27 billion, and levered free cash flow is negative 458 million. So these are very bad financials, and I don't think it'll get better anytime soon. Now taking a look at Royal Caribbean, ticker symbol RCL, key stats. You can see the trailing PE is 5.54. Forward PE is also higher, 24.9. Scrolling down a bit, 52-week change down 64.95%. 52-week high versus low, 135 versus 19.25. That's a very big drop. Now looking at the share stats, 18.45 held by insiders, 75% held by institutions. Scrolling down a bit. Now the dividend yield is pretty high, at 6.86%. Well, the dividend yield is not high, but the payout ratio is 357%, which is ridiculously unsustainable. You typically want the payout ratio to be lower than 50, just so that's like a healthy number, that they're able to, the amount they earn relative to what they pay out, it's sustainable. Versus now 357%, whatever they earn, they're just paying out to shareholders like way more than what they can afford. Profitability, profit margins 17%, operating margin is 19% in the trailing 12 months. Return on assets 4.52%. Now looking at the revenue growth year over year, 7.9%. Not that high, but it's a little higher than Carnival. Gross profit at 5.1 billion. Taking a look at the balance sheet, it's 243 million in cash, which is very low. I don't think it'll sustain them that long. Total debt is 11.8 billion. Debt to equity is 92.65. So for every dollar of equity they have $92 in debt, which is very, very leveraged. Operating cash flow 3.72 billion and levered free cash flow at negative 2.7 million. So both of these companies are not doing well financially. I don't see them doing well anytime soon or improving, because no one wants to travel. And I personally would not hold any of these positions just because there are better quality assets in the market. That's all for this video. What are your thoughts on Royal Caribbean and Carnival Cruise Line? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.